For the past 3 years, the rental market in America did something nobody saw coming. And landlords are feeling the pressure in 2025. Make sure you subscribe for more deep dives into America. Hit Vegas, and it hit hard and fast. The population shot up by 18%. You had families looking for more space, businesses trying to escape high taxes, and retirees chasing the sunshine. New suburbs were just sprawling out across the desert. Family entertainment started popping up that had nothing to do with gambling. The Raiders Stadium and the NHL's Golden Knights created a real sports culture. But then, 2025 served up a harsh reality check. Tourism never fully bounced back. Construction costs skyrocketed, and the whole entertainment industry was struggling. It became clear that post-pandemic travel habits had changed for good. Tourism was down 22%, and convention cancellations were piling up. Business conferences went virtual, and people just weren't spending as much on entertainment. All those service industry jobs, the absolute lifeblood of Vegas, couldn't keep up with the rent hikes. Then came the water restrictions, which threatened any further expansion into the desert. The water levels in Lake Mead dropped to a critical point. Casinos began offering rental discounts, free show tickets, dining credits, anything to fill empty apartments near the Strip. But the water crisis raised serious questions about whether a city in the desert could last long-term. Vegas learned the hardest lesson of all: biggest economic shifts. All right, let's get into it. Kicking us off at number 10, Austin, Texas. You can't build a permanent city on a foundation of temporary fun. Number 4, Portland, Oregon. For a long time, Portland's unique quirkiness was its biggest asset. The whole "keep Portland weird" thing drove rents sky high, until being weird just got too expensive for most people. What was once a hipster paradise turned into an economic exodus. A 12% rent drop was the reality check that creativity alone can't pay the bills. Between 2018 and 2023, Portland was a magnet for the creative class and tech workers spilling over from Seattle. Nike was expanding, Intel was growing, and there was a booming startup culture. Tech jobs jumped by 31%. The city's food truck scene went global. It was the craft brewing capital, with an art scene that could give Brooklyn a run for its money. Keep Portland Weird became an international brand. Remote workers were moving there for the city's character, not just for convenience. But in 2025, weird turned into expensive. Expensive started to feel dangerous, and that led to an exodus. Concerns over public safety started to kill the city's cultural appeal. Businesses downtown were boarding up, and tech workers were relocating. The creative economy just couldn't survive. Austin's rise was legendary, and frankly, so is its fall. It went from Silicon Hills to Ghost Hills, when its customers were too afraid to visit. The flow of new talent dried up as families started choosing the suburbs instead. Landlords are now offering things like free parking, pet spas, and even partnerships with local breweries and art studios. But the big tech companies are demanding everyone return to the office, which kills the whole remote work advantage. Portland learned the hard way that a cool culture doesn't pay the rent, especially when safety becomes a real issue. Even weird needs a solid foundation of security. The mystery in the Pacific Northwest is getting deeper. But the East Coast tells an even bigger story. Number 3, Seattle, Washington. Seattle's tech empire was supposed to be completely bulletproof. Amazon, Microsoft, and Boeing were creating a demand that seemed like it would never end. But the Emerald City is now facing a future of ghost towers. We're talking a 16% crash in rent, as even the biggest tech giants are showing cracks. Between 2015 and 2022, Seattle became the global tech capital outside of Silicon Valley. You had Amazon's explosive growth and Microsoft's total dominance in cloud computing. The whole startup ecosystem was thriving. Tech job growth shot up by 45%. The South Lake Union neighborhood transformed from rents have collapsed by 14% year over year, the sharpest drop in the entire Sun Belt. an industrial wasteland into a gleaming tech corridor. Glass towers rose up like cathedrals to the digital age. With average tech salaries at $180,000, a $3,000 a month rent started to look reasonable. Bidding wars were just normal. This was the Amazon effect. It rippled through absolutely everything: Boeing's aerospace industry, Starbucks global headquarters, and all the startup unicorns. Seattle felt completely unstoppable. But 2025 brought a very humbling reality check. Tech layoffs hit, and remote work became permanent. The city's appeal started to fade. That tech bubble bursting hit Seattle the hardest. Amazon slashed 18,000 jobs, and Microsoft cut 10,000. Remote work completely killed the energy downtown. Sure, commute times got better, but only because nobody was commuting. Restaurants, shops, and all the local services just collapsed. The psychological shift for the city was devastating. The pandemic fundamentally changed how people want to live and work. Seattle's prestige just lost its appeal compared to smaller, more balanced cities. The migration out isn't a massive flood, but it's relentless. Every family that leaves takes a piece of the city's stability with them. The downtown vacancy rate hit 31%, the highest ever recorded. Those gleaming towers that were once testaments to innovation now stand half empty. Between 2020 and 2023, Austin became the nation's tech mecca, with remote workers flooding in from California, reflecting the clouds hanging over a very uncertain future. Now, tenants are the ones negotiating for flexible leases and lower prices. The power dynamic has completely flipped. The Seattle skyline still gleams in the mist, but underneath, the city is incredibly fragile. These cracks aren't from earthquakes. They're from an economy learning that even tech dreams have their limits. The Pacific Northwest is falling, but it's nothing compared to California's collapse. Number 2, San Francisco, California. If any city truly defines the word collapse, it's San Francisco. It went from the crown jewel of innovation to an almost unrecognizable wasteland. A 15% rent crash and vacancy rates that are shattering every single record. Towers that were once untouchable are now begging for tenants at $3,000 a month, with incentives. For decades, San Francisco was the heartbeat of American innovation. Google, Facebook, Twitter, Uber. It felt like every world-changing startup began right here. Between 2010 and 2022, venture capital just flooded into Silicon Valley. The tech market cap reached $2.3 trillion. There were IPO celebrations every week. Starting salaries of $200,000 were considered normal. Venture capital pouring in, and billion-dollar startups sprouting up everywhere. The city branded itself. Housing became less of a home and more of an investment vehicle. We're talking $4,000 studios with 12-month waitlists. Foreign billionaires were buying up everything. They were buying up towers without even seeing them. The demand from tech workers made any price tag look reasonable. This was the city that set the housing price floor for the whole country. But 2025 brought a total unraveling. The tech exodus never reversed, and remote work just became the new normal. We're talking 87,000 tech workers gone, leaving downtown 40% empty. It was a perfect storm of dysfunction. Huge tech layoffs, a surge in crime, a decline in quality of life, and a regulatory nightmare. Downtown turned into a canyon of silent glass towers. Entire city blocks became ghost corridors. For lease signs just blended into the scenery. Meanwhile, property taxes, maintenance, and insurance costs doubled, completely wiping out any profits. Investors were completely trapped, unable to refinance without losing millions of dollars. But this goes beyond economics. It's about perception. The crime, homelessness, and general dysfunction sent potential renters running. In the restaurants, boutiques, and galleries, the very things that defined the city's unique charm are closing down. It's leaving a cultural vacuum where that irreplaceable character used to be. As the new Silicon Valley, And for a while, it really lived up to the hype. Downtown cranes filled the... Even its prized identity as a tech hub is fading, as companies ditch their headquarters for cheaper cities. Landlords who used to boast about their passive income are now practically begging for tenants. The irony is just haunting. The city that set the housing price floor for everyone is now showing us just how far the market can actually fall. San Francisco's decline isn't a temporary dip, it's a fundamental transformation. But even this seems small compared to our number one. Number 1, New York City. And in the top spot, the empire is finally showing its cracks. The untouchable is taking a fall, a 12% crash in Manhattan, with a 15% collapse in Brooklyn and Queens. For generations, New York's rental market seemed absolutely bulletproof. No matter what the economy was doing, no matter what crisis hit, demand always came roaring back. But the empire of rent is finally hitting its ceiling. For 150 years, New York meant opportunity. From Ellis Island to Silicon Alley, every generation came here to chase their American dream. Between 2010 and 2023, money from all over the world poured into Manhattan. These global capital inflows hit $47 billion a year. Skyline 24/7. Luxury towers like the Independent and 70 Rainey shot up overnight, and landlords couldn't. Billionaires Row rose above Central Park. $100 million penthouses were selling before the construction was even finished. This was where finance ruled the world, media shaped our culture, and fashion set the trends for everyone else. Young professionals would pay anything for a Manhattan studio because being close to the action was everything. And international buyers, who were the secret engine of this real estate machine, treated Manhattan like it was a global safe deposit box. International buyers made up 23% of all luxury home purchases. But 2025 brought the unthinkable. It turns out even New York City has its limits. A perfect storm is now destroying the very foundation of that demand. Corporate layoffs in finance, media, and tech are eating away at the renter base that always made the city so resilient. Wall Street is shedding jobs, the media industry is shrinking, and the funding for startups has all but vanished. That high-paying professional class is simply disappearing. You see it with Goldman Sachs' massive cuts, media companies shutting down, and tech startups failing. At the same time, international buyers pulled back because of global instability and tax increases. For the first time in recent memory, the ultra-wealthy are tightening their belts. Hike up the rent fast enough. It got to the point where 12-month wait lists for apartments were standard. Luxury rentals on Billionaires Row are being marked down by hundreds of thousands of dollars. And now, owners of mid-market buildings are facing brutal refinancing deals are crushing cash flow. And the young professionals who were once willing to pay any price are now heading out to places like Charlotte, Nashville, and Philadelphia. The culture is still here, but fewer people can afford the ticket price. For the first time in decades, it's the renters who have the upper hand, and landlords are scrambling to offer incentives. They're back everywhere. Free rent, waived security deposits, luxury upgrades, anything just to lure tenants in. The developers who bet on a never-ending flow of wealth are now watching their towers overlook half-empty streets. For the smaller landlords, the whispers about foreclosure have started. The math just doesn't work anymore. The energy that defined New York for a century is slowly scattering to hungrier, more affordable cities. New York's decline isn't some dramatic event. It's a slow contraction, a city that's finally learning its limits. For the first time in living memory, even New Yorkers are admitting the unthinkable. The empire of rent has finally hit its ceiling. And when New York struggles, but in 2025, that fever has broken, and it broke hard. The average rent is down a whopping 14% year over year. America feels it. The financial capital, the cultural heartbeat, a global gateway. All of them are showing cracks. The skyline might still shine, but down below, a new reality is setting in. Ambition has finally met exhaustion. The city that never sleeps is taking a pause, if only for a moment, to catch its breath. All across the United States, a quiet revolution is unfolding. For the first time in over a decade, tenants are back in the driver's seat. The era of bidding wars, blind applications, and ruthless rent hikes is ending. It's being replaced by empty units, falling prices, and desperate landlords. From Austin's tech exodus to New York's cracking empire, a pattern is emerging. This isn't just a simple price correction. It's a cultural shift. Millions are questioning whether renting or even owning makes sense when costs are rising faster than wages. Developers built luxury, while renters wanted livable. Investors chased returns, while families just needed stability. Now, the day of reckoning has arrived. Housing markets don't defy gravity forever. It climbed higher and faster than at any point in modern history. We're talking 60% increases, overnight bidding wars, and families being priced out entirely. Thousands of those glossy new apartments built during the boom are now sitting half empty. Some cities will recover, and others are going to shrink. But everywhere, the lesson is the same. Even real estate empires have their limits. What happens next is going to reshape the map of America, with power flowing from the coasts to the center, from luxury to livability, and from speculation to sustainability. The rental revolution is just getting started. You've been watching Discover the Nation, your home for cinematic deep dives into America's biggest transformations. If you found this breakdown eye-opening, go ahead and hit subscribe, turn on your notifications, and share this video. Because what's happening today in the rental market is just the beginning of a massive economic reshaping. The numbers are telling the story. And that story is far from over. For the first time in a generation, the American dream of affordable housing might actually be within reach again. But that only happens if we learn from the shakeup that's happening right now. The cities that adapt will be the ones that thrive, their rooftop pools just echoing with silence. The reason? The tech bubble didn't just pop, it burst spectacularly. The ones that don't will just become cautionary tales. As always, thanks for watching, and we'll catch you on the next deep dive into the major shifts happening across America. Until then, keep exploring this country with us, one story at a time. These rental wars are a total game changer, and you've just seen a first-hand look at economic history as it happens. The old rental empire is crumbling, and out of the rubble, a whole new American housing landscape is starting to take shape. One where tenants are finally getting some power, landlords have to compete on a level playing field, and where the dream of a home you can actually afford might just become a reality again. This is the moment that generations of renters have been waiting for. The tables are finally turning, and the future of housing in America is being written right now. Don't forget to hit that. Layoffs from giants like Meta, Oracle, and Tesla completely gutted Austin's high-income renter base. Subscribe button and ring the bell, because this huge economic transformation we're all watching is just getting started. More cities are going to see their markets flip. New trends are going to pop up, and we'll be right here covering every single twist and turn of what might be one of the biggest economic stories of our time. Thanks for joining us as we've explored the collapse of America's rental empire. So keep watching, keep learning, and most of all, keep discovering the country that's changing right before our very eyes. You can see the signs everywhere, from coast to coast. Empty high-end apartment buildings, landlords offering crazy incentives, and families finally able to find homes they can afford. This isn't just a market correction. It's a fundamental shift in our society. In a flash, 67,000 tech jobs simply vanished. Developers who once boasted about 12-month wait lists, the generation that was completely priced out of the housing market, is finally getting a real shot. Cities that pushed out essential workers like teachers and nurses might actually be able to welcome them back home. The American dream, which has taken a beating from decades of speculation, is finally showing some signs of life. But big changes are always messy, and this housing revolution is no different. The fortunes that were built on the idea of rent going up forever are starting to crumble. Investment strategies, worth billions of dollars, are falling apart. The old rulebook just doesn't work anymore. And in its place, a new reality is taking shape. One where tenants actually have some leverage. Landlords now have to compete on value, and the market is getting back to basics, instead of just pure speculation. This is what a fair housing market really looks like. So the real question isn't if this change is going to continue. The question are now offering all kinds of desperate deals, like 3 months of free rent and waiving security deposits. Which cities are going to adapt, and which ones are going to fight it until the bitter end? You can see history being made right now in vacant apartments and plummeting rent prices. The entire rental market is starting to crumble, and you can feel the shockwaves all the way from the penthouses in Miami to the studio apartments in Manhattan. A major shakeup has begun. So the only question left is, what side of this big shift will you be on when the dust finally settles? Thank you for watching Discover the Nation. Until we see you next time, keep your eye on the changing American landscape. After all, the story of our cities really is the story of our entire nation. And that story is being rewritten as we speak, especially over the last 2 years. But even throwing in concert tickets just to sweeten the pot. That old nickname Silicon Hills, now it feels more like a cruel joke. In those downtown towers like the Independent and 70 Rainey, vacancy rates have hit a 10-year high of 23%. Over in East Austin, which was once the heart of the city's creative revival, landlords are just slashing rents to compete with each other. For the investors who over-leveraged, the landlords who bought luxury condos at record prices, expecting endless growth. But now, in 2025, that bubble is bursting, and the numbers are honestly shocking. The profits are completely gone. Their returns have evaporated under the weight of high-interest loans and tenants that are nowhere to be found. But for renters, this is the break they've been waiting for. A city that got crazy expensive almost overnight is finally starting to crack. The lesson from Austin is pretty clear. The city that shot up the fastest is coming down just as hard, and the shockwaves are hitting the entire Sun Belt. But if you think that's something, wait till you hear about Miami. Number 9, Miami, Florida. Miami's rental market didn't just boom, it went into overdrive. It went from a crypto paradise to a financial nightmare, with an 11% drop in rent and vacancies popping up everywhere. It was all fueled by people leaving big cities during the pandemic, a flood of crypto money, and international investors looking for a piece of the good life. The city quickly turned into a playground for the super rich and the work-from-home crowd. Between 2020 and 2022, rents just skyrocketed by over 60%, pushing a lot of the local folks out and turning every downtown high-rise into a monument to living large. The median rent shot up from $2,100 to $3,360 in just 2 years. From the billionaire playgrounds in Miami to the untouchable towers of New York, landlords are starting to panic. But now, in 2025, the party's over, and there's no denying the crash. Average rents have dropped 11% from last year. And you're seeing for rent signs all over Brickell, downtown, and Miami Beach. Those super hyped luxury towers, the ones with the amazing ocean views and infinity pools, are now advertising things like free parking, no security deposit, and even $2,000 gift cards just to get people in the door. And it's not just that fewer people want to rent. Rising costs are absolutely killing landlords' profits. Insurance rates have tripled after all the hurricane damage, leaving a lot of property owners in the red. On top of that, HOA fees have gone through the roof as buildings rush to comply with Florida's new safety laws. We're talking $50,000 special assessments that are just wiping out owners. The bottom line? Thousands of investors are bleeding money every single month. For a lot of them, the game is already over. Condos that were once going for $900,000 are now selling for $700,000. Or they're just sitting on the market, completely unsold. And the Airbnb hosts who were making a killing on tourists are now getting out of the business. We're seeing rents drop 15%, vacancies are exploding, and you can find desperate deals everywhere, with 3 months of free rent becoming the new normal. As tourism slows down and the cost of upkeep eats away at any profit they might make. Even the foreign investors, who have been Miami's financial safety net for years, are starting to pull out, spooked by the increasing risk of major storms and these never-ending special assessments. Sure, the view from a high-rise still looks incredible. That turquoise water, the whole skyline sparkling in the sun. But behind all that glamour, the numbers just don't add up anymore. It's a classic cautionary tale from Miami. When the price of luxury gets completely disconnected from reality, even paradise can fall apart. All right, number 8 on our list, Atlanta, Georgia. Now, Atlanta was supposed to be a different story. The safe bet in the South. You had a booming job market, housing was actually affordable, and people were moving there in droves from both coasts, which made it a developer's dream. So, they all rushed in, pouring billions of dollars into new apartment buildings all the way from Midtown to Sandy Springs. Between 2021 and 2024, over 50,000 new units came onto the market, which was way more than the city could handle. That whole build it and they will come philosophy. Today we're counting down the top 10 cities where the rental market is collapsing the hardest. Created a total feeding frenzy. But now, here in 2025, that boom has officially turned into a bust. Rents have dropped 9% from last year, vacancies are on the rise, and you can bet developers are starting to panic. High-rises that used to fill up practically overnight are now sitting half empty. But the problem is bigger than just overbuilding. The issue is that wages have completely stalled, while inflation is taking a huge bite out of every family's budget. Companies are cutting back, which is hitting the job market hard. And now, landlords are offering things like 3 months of free rent, free parking, and no security deposits, doing whatever it takes to lure tenants back. The highways are still clogged with traffic, but people's bank accounts just can't keep up with the rising costs. Atlanta learned a tough lesson. Even a safe bet market can get oversupplied. Just because you build it doesn't mean you can rent it. But all of that is nothing compared to what's happening in Phoenix. Number 7, Phoenix, Arizona. The expansion in Phoenix was out of control, sprawling. And you'll want to stick around for number 1 because what's happening in that city will change the way you think about across the desert like an economic wildfire, turning a Sunbelt success story into a climate cautionary tale. We're talking an 8% rent collapse as reality hits the desert. Between 2020 and 2023, Phoenix was the definition of the American dream: affordable housing, no state income tax, and endless sunshine. People poured in from California looking for more space and to save some money. New communities were popping up constantly. You could get luxury amenities and resort-style living for a fraction of the price on the coast. The population jumped by 15%. But 2025 brought a serious reality check. Record heat waves, water restrictions, and a strained infrastructure. We saw 129-degree heat records. Air conditioning bills were averaging $400 a month. The reason? Climate change is making desert living unsustainable. 115-degree days were lasting for weeks. They even banned refilling swimming pools. Golf courses were turning brown. The infrastructure was failing under the pressure of the climate. Rolling blackouts were becoming routine. Landlords just can't keep up with utility costs, and renters are heading back to milder climates. The American housing market. This is a massive power shift. And for the first time in a decade, renters are finally getting the upper hand. Phoenix learned what the indigenous people there always knew. The desert has limits. Cheap rent doesn't mean a thing when the climate starts to fight back. But Denver's mountain-high fall is what's shocking everyone. Number 6, Denver, Colorado. Denver's boom was like the Colorado Gold Rush 2.0. It had legal cannabis, an outdoor paradise, and a full-blown tech invasion. Mile-high dreams were met with mile-high costs. Now there's a 10% rental reality check in America's playground. Between 2019 and 2024, Denver became a true mecca for millennials. You had legal weed, world-class skiing, and the flexibility of remote work. The cannabis industry absolutely exploded to $2.2 billion. Tech companies moved in to attract top talent. It was the craft brewery capital, an outdoor gear paradise with progressive politics. It was the perfect storm for young professionals to move there. But in 2025, reality hit hard. The cannabis market got saturated. Tech layoffs started mounting, and the cost of living began crushing dreams. The cannabis gold rush turned into an oversupply nightmare. Prices crashed by 60%. This is Discover the Nation, and today we're breaking down the cities where rent is plummeting, with dispensaries closing every week. Tech layoffs sent a ripple effect through the whole economy, and that remote work advantage, it faded. That all vanished when everyone started working from home. Landlords got creative, offering ski lift tickets, credits for breweries, and discounts on hiking gear, anything tied to that mountain lifestyle. But young professionals started picking cheaper mountain towns or just leaving Colorado altogether. The average rent fell from $1,800 down to $1,620. Denver learned the hard way that a great lifestyle alone doesn't pay the rent. Even a paradise needs a solid economy to survive. But none of that even came close to what went down in Las Vegas. Number 5, Las Vegas, Nevada. A city that bet everything on endless growth. And for once, the house actually lost. Sin City became an economic ghost town with a 13% drop in rent, as its ultimate gamble failed to pay off. Between 2020 and 2024, Vegas was becoming more than just an entertainment town. It was becoming a place people called home. No state income tax, pretty affordable, and that 24/7 energy. The California Exodus.